Hi, everybody. Welcome. It's Crypto Adrian speaking. Welcome to today's episode of the Nest Show podcast. It's been quite a while since we actually had, one of the episodes recently. There was an episode with Sabri Subi, about the digital marketing and importance, how we mix it, into the overall investment for the company. But today we have actually a truly special guest. For the first time ever, we're talking about Joe Takayama. And Joe is going to talk to us about many bits and pieces about the markets from his outlooks all the way to the, perhaps some forecasts if we hear, to discover all the depths of his success story because he's truly a successful person. We are talking about a former Morgan Stanley trader with an active YouTuber with total over 676,000 subscribers. You can find him on Twitter immediately with at Takayama Joe. And so much of a content creator for crypto, for outside of crypto. I'd love to hear so much more. And I hope you guys as well. So tune in and make sure you get your coffee ready. Joe Takayama is here going to hit you with all those good crazy updates. How are you doing today, Joe?
Very good. Thank you, Adrian, for inviting me to your wonderful, podcast. I'm very, very honored to be in this channel. Thank you.
Love it. Yeah, love it. This is actually again, many people will call it luck. Some people will call it destiny that we are talking together today. We happen to be actually meeting also in Dubai some time ago, right? And we know that Dubai is an actually very cool place for the crypto happen and for
Mhm.
growing the businesses. Talk to me a little bit about your success story. How did it happen that you are sitting there so relaxed with the collar up and all this amazing outlook, man? It's good looking. Tell me.
Um, yeah, I'm still like humbly working on my stuff, but I try to work it out. But I started off my career as a Morgan Stanley hedge fund trader in 2007, right before the Lehman collapse and stuff like that. Then since then, I've been in the traditional finance industry for about 10 years. So I was doing trading, and also I went to private equity investment in the real estate business. And after that, I was a former city investment banker for about 3 years. Then I was, like literally wondering, the traditional finance is really my way to go for the rest of my life because of the lifestyle and so on. So I started helping my father's business in Germany, and I met back then. It was like 2017. So I met crypto there. My friend was talking about crypto and stuff. So I started slowly trading and trading. Since then, I was like basically personal, individual investor since then. But recently, I started my YouTube channel 2 years ago for the US equity. And the US equity channel growing. And then my friend told me, why don't I cover crypto? Because in Japan, at least, many crypto YouTubers do not have any finance background, at least like a really solid one. So I started like about a year ago, and also started investing in some deals and stuff. And then some of them popped because of the market, and so I thought this may be something very interesting to pursue. So I started focusing on investing and also YouTube, and also I sometimes help other NFT project or crypto project to penetrate into Japan market and so on. And but I was wondering if Japan is a really right place to be in. I mean, the market wise for me it's very good, but the location wise, due to the regulation and stuff. And I came to Binance and other conference early this year, and I thought this is the place to be for now at least. So I convinced my wife and family to move to Dubai. And here I am.
Wow, that's a roundup. That's a good roundup. I wasn't really expecting that part about the Dubai. I'm I'm a little bit surprised here. Uh, and funnily enough, I was supposed to attend this conference earlier this year. It was in March, right?
Mhm.
And
Yes.
right there when I landed in Dubai, for the conference, I actually got my appendix burst and it landed up in hospital instead of going to kind of
Oh.
conference, right? So it was pretty like, what are the odds, right? And we would have met there. I'm pretty sure about that. Like it's intriguing about what you mentioned in Japan, and in a lot of honesty, I mean, I don't have like within the community, I don't have much of exposure. I think in the Asian side of the things, and I mean the far Asian, like the Japanese part. I'm really really curious because I've always been very much inspired about the culture. For like I think it's very well known, right, about the respect that you would have in the social frames as well, so that it's very much
Mhm.
interesting on the cultural side. But like have you figured out whether Japan um, has this capacity of becoming this crypto hub for you? Because you said right now it's not necessarily there, but has it the potential, got?
Um, I would say yes, because the first of all, the market wise is very, very big due to the economy size. And also, people are very interested in like a trading. I think for the FX market, at least, Japan is one of the biggest market. So in terms of market wise, of course, yes. And also, as well as you know, there are many big IPs in Japan for like manga, anime. So from that perspective, I really think there are many potentials, opportunities out of Japan. But at this moment, we have very difficult regulations, such as if we issue tokens, and that means whatever you get money from issuing tokens, you got to be taxed on it. So that's very difficult. So whoever want to issue tokens, people go outside of Japan. And also, if you make money on trading, it's almost like not automatic, but most of the time, 50% tax on the revenue on trading.
Gotcha. And
So,
and I was actually and I was really asking about the regulations. I think, right, because the countries always would have the potential as long as they have the regulations to back it up, right? Because the
mhm,
regulations is most likely what's going to stop any innovation coming up and popping up. So I'm really I'm really concerned anytime we talk crypto with the people, that the countries would be so resistant to even just get the touch, get the feel of what that is,
mhm,
and they would just reject it in like just immediately reject it, right? And I'm talking also about the European countries, like you mentioned Germany, right?
mhm.
You had any experience there?
Yes, yes. I was in Germany.
Yeah, but I mean, regulatory wise, do you feel any good changes actually maybe coming there?
You mean like in Germany?
Yeah, in Germany, do like any good regulatory changes, you think?
Yeah. Back then, back like 2017, it wasn't clear like what's the tax regulation wise over there. But people kind of knew that if you hold your crypto over a year, there's no tax on the profit. But I think earlier this year, the government actually declared this is the official law. So those changes are very, very big for the traders, I think.
Gotcha. Makes sense. Joe, I'm pretty curious, above any regulatory side, about any side, for Germany, for Japan, and then of course all the bits and pieces regarding the regulations. I'm pretty curious, how's 2022 been treating you so far? Has it been good for you?
Early on 2020 is very difficult, but I shifted most of my funds into stable coins. And also, I stopped trading listed tokens. So I started looking at like private project, which is not listed yet. So let's see.
Got you. Makes sense. I mean, I'm asking it as well, from the perspective of a trader, of an investor, and at the same time, as a part of this crypto community, if you will, because 2022 has brought not only the bear markets, to the financial markets overall, perhaps except for
Mhm.
for the energy stocks, but we are mainly observing, this huge crypto rundown, 75% of the highs, for Bitcoin, 80%, 90% declines on some altcoins. That you would have stocks, which would be 30% down. But even above that, like you would have Netflix, which had been like 70,
Yeah.
80% down for quite a long time until the earnings were recently announced. So it's been such a pain for many people. And there was this crypto collapse in May, right? That you would have with Luna and Terra crash. It's
Mhm.
just so many different pieces that would line up, to actually destroy people's portfolios. So
Yeah.
that's the question. Like, did you? Luckily for you, congratulations on getting into stables. But did you find any kind of like suffering or winning, outside crypto too?
Most of the like let's say first quarter. I mean, yeah, first quarter was suffering, but at the same time, I see many valuation deterioration in many private deals, and also there are many scam deals going out of the market. So it's now what's left out there is very solid background, very solid teams, very focusing on building up the project and so on. So I think it in terms of the cleanness of the project wise is very good. So that's the reason why I shifted my focus into the private project. So I think that was the bad in terms of return for the first quarter. But afterwards, I'm relaxed and focusing on the future development and so on. So
You do seem to be very relaxed, and I enjoy that. That's very good. The being relaxed in such a market condition, is basically what 99% of people will never have. So this
yeah.
already is some kind of evidence of how successful you are in the field. And speaking of that, there must have been some investing challenges on your path. And, ever since you got kind of like stepped in, on this, Morgan Stanley kind of like hedge fund trading floor. Uh, what have been the biggest challenges investing wise for you? What has challenged you the most?
You mean in terms of the like since I started my career?
Yeah, since you started your career, since you started trading actively, like the biggest investing challenges you would have. Is it maybe tax reporting? Is it actually just picking up the building the right portfolio, right? I'm
Mhm.
mentioning tax reporting because of regulations, and it's nowhere near clear, to many countries for crypto, and it's
Right.
always been pain. Yeah, like biggest investing challenges you would have.
What's been really difficult is stick to my like first rules because sometimes there are really strong bull market after the COVID, and then people want to go into the crypto or tech and those like really attractive return generating names. But at the same time, if I focus all my funds into those things afterwards, we see the results. Some lost all the money, some hate now investing, but that's not the ideal status, right? So we always have to diversify the risk, which is very difficult mentally, but not running for the too good returns. That's very difficult thing, actually. Yeah.
Yeah, perfectly aligned. I think it's one of the reasons, that most of the people basically constantly loses money is because they keep getting exposed to risk constantly and too much, right? There is this kind of like risk temporal aspect to many people who are listening and viewing that right now, that the longer you stick to, or the longer you have kind of like your position open outside of your plan. Let's say, imagine you have a trade going on, right, and the trade is fulfilled, and you still kind of like try to keep it, right, not
Mhm.
unprotected, because you feel so confident, so sure about that, right? The bigger the risk actually is, and it increases like logarithmically, if you will. So it
Yeah.
is it is pretty it is pretty it is pretty devastating to many people, for not sticking to their guns, right? Not really
Yeah.
playing their cards right. And you
And
just
also,
confirmed that.
like now the market kind of rebounding, right? And then people say like, oh, if you still have stable coin, you're missing out and all the stuff. But at the end of the day, investing is for long-term gain. So if you miss like bottom 10%, it doesn't really matter. So what I want to do is get on the long wave, not the like from the beginning. It doesn't really matter. So
Yeah, yeah,
that's also,
perfect.
yeah, important.
Very well said. Very well said, Joe. And well, that's really what takes me to the next point, right? Because we've briefly touched on the 2022 bear market, which we have been in for
Mhm.
quite some months already. But do you have your kind of like adjustments, your to your strategy, to your outlook, the way you see the markets for the rest of the year?
Mhm. Yes, the crypto market is kind of rebounding, obviously, but at the same time, the outlook of the economy, global economy, is getting worse and worse. Plus, the Fed is going to raise interest rate further, a lot further. So definitely the macro perspective of the market is going to worse from here. So, but people kind of like being FOMO, want to run to the crypto ride. But for my plan for the rest of the year at least, or like 3 months, I'll stick with my current position. I do not want to rush into the short term pop. Yeah.
Got you. It makes sense. Makes sense, especially when you think about it. Actually, I'll just share my screen real quick for for the charts. While looking at, of course, at the long-term yields, this is 10-year chart for the
Mhm.
yields. We are right now somewhere around 2.91 percent. We are ahead of this FOMC meeting, which is going to be decisive for perhaps boosting the rates upwards, even more. However, we are looking at, and in so many cases, we are looking at this once in generation kind of like a breakthrough moment. Like that's at least what the charts would tell, right? You would have this major trend that had lasted for about 42 years, ever since starting and peaking in the 1980, and we are looking at a breakout which had happened like just recently, right? Which has happened literally like recently. So we are
Mhm.
talking about, well, recession threats, of course. We are talking about inflation unseen ever since, over 40, 50 years. We are talking about this, breakthrough moment for the yields, for interest rates. Some people say it may double from here, potentially go to even 6% on the 10-year
Mhm.
basis. It's pretty sick, and this is exactly what's taken the markets, downwards, if you will. And crypto historically, wouldn't, like, with limited sample size, it definitely wouldn't react well to, to increasing the rates, just like
Mhm.
stocks. And it does seem that there is like a very strong correlation overall between the crypto market and the stock market. And well, does that change anything to your portfolio plans, as in you play, whether you have exposure to crypto or to equities, via stables or some other assets on the risk on side?
At this moment, I take those two asset classes as the same thing, because it's now correlation is over 90%, and then now the market focus is macro, so where the money goes and goes out. So it's very similar, I think, a move they do. Um, so so yeah, I think they're mostly the same
Got you,
asset
got
to
you.
me.
Yeah, I'm asking, because many people whenever asked, they would tell you that, well, it's a completely different thing, but at the same time, when you look at this correlation, just like you said, and it's been very, very strong this year, right? And it doesn't always
Mhm.
get this high. It doesn't always get this strong, right? At times it just inverse. It's a negative correlation. When one market just goes up, the other goes down, and they have this, um, what it may seem, Bitcoin would be considered this digital gold, right? And back in the day when we had this March COVID crash, 2020, uh, there was a situation when seemingly uncorrelated markets started being correlated altogether immediately, right?
Mhm.
We were talking about not only stocks collapsing at the fastest rate ever, right? We're talking about cryptos collapsing, and technically it should be a hedge perhaps towards it because the Bitcoin would be this digital gold, which it wasn't,
Mm-hmm.
right? Then you would have you would have, of course, commodities dropping, as I said, like I said, gold dropping, which was supposed to be this hedge against violent movements on the stock side as well,
Mm-hmm.
providing stability, which it failed at that time. You would look also and of course the oil prices dropping to this historically low levels, where you would have this on the futures, if you remember futures May 2020, you would have this minus $40, per
Yes.
the contract, and somebody would order the futures, and they would deliver the barrels of oil perhaps to the home next day. And above all, every single thing that technically was even inversely correlated, as in gold with stocks with the dollar, every single thing dropped back then. And this is what happens when this black swan kind of like crashes. And we had this black swan in May 2021, 2022,
Mm-hmm.
early this year, for crypto, right? And I'm talking about Luna crash, talking about the
Mm-hmm.
Tether crash. And I know this project, this environment was definitely having a lot of Asian supporters, right, in the Asian region, uh,
Yeah.
perhaps even Japanese. We'll get there in a second. But did it change your perspective about what crypto is in terms of like whether it's secure or not? So many people lost money. What's your take on that?
Um, you mean like crypto is a you mean like safe product? Is that what you're saying? Or
Yeah, a little bit. I mean, did it shock you to see this Luna Terra crash? Did you see it coming? Did you experience any difficulties
oh,
for it?
I was like I said, I was looking at stable coins for quite a while, and then most of my fund, I mean, 30% of my fund was in UST. I was generating a yield. And then I started seeing some differences between US, UST and then USDT and USDC. And then UST was a little bit like lowering, I mean, the inch lower than other stable coins. So I thought, oh, maybe some shocks coming. So I moved all my fund to USDC a couple days before the collapse happens. And I spoke about it on the YouTube. So to me, that was not too obvious, but I saw some signs and then I knew the mechanism. So I didn't want to take too much risk on it. So I kind of got out of it earlier, luckily.
Yeah, that's a lot of luck. Like being in UST is like being in this, eye of the cyclone, and eye of this hurricane, right? And being right in the middle, you still manage to kind of like get out harmlessly. So it's pretty good to hear. And at the same time, I think this is a valuable lesson to many people out there. Of course, I wish many people, would have learned earlier than after losing money. But when you guys see, all the viewers and listeners, when anybody sees, certain discrepancies and changes that shouldn't be there, some abnormal conditions, at times it's
Mhm.
good to kind of like not ignore that, right? There is this cognitive dissonance bias that we would have, that when something doesn't fit in our criterion, when something doesn't fit in our agenda, in our way of thinking, that we just like a project, right? And we have information that is conflicting it, we tend to reject it. We tend to kind of like
Mhm.
ignore that, which many people did, right? And they really paid an expensive lesson there.
Yeah.
And well, it does kind of like, again, a little bit take me to the next point, where we would cover parts of the cryptos and equities, right? Perhaps some
Mhm.
charts and concepts to the investing part. Uh, are we good to go there?
Yes, definitely.
Awesome.
I love to.
Joe, amazing, likewise. Joe, I'd love to hear about your equity approach. Like, in what terms do you invest in equities? Do you invest in stocks per se, or do you invest in some ETFs outside crypto, or some private deals at all? How does it look for you?
In terms of equity, I invest in stocks and ETFs. I mostly play with the long-term perspective. And I do like individual names like Tesla and Microsoft and so on, but I tend to focus on like broader like names like ETFs.
Gotcha, gotcha. Makes sense. And well, I'll have a couple of charts to perhaps comment a couple of things about that. Right? We are looking right now at a very fresh turnaround of the things, just like you briefly mentioned, Joe. Um, and it's just arrived there, right? We are talking about,
Mhm.
well, this local breakout that just came through, on the cyclical stocks, as in, the
Mhm.
consumer discretionary. You would have consumer staples, which is defensive stock, and it's lagging, right? You would have energy
Yeah.
stocks, which are basically kind of like under the XLE ETF index, basically they're well, rejecting some short-term averages, some short-term resistances. It's kind of like, really tumbled a lot. You're looking
Mhm.
at the financials, which are also rebounding off the lows. Healthcare, another kind of like, defensive part. Uh, and then you would have this technology, right? Technology, as in anything that regards the technology sector, for the stocks, for the industry. You would look at this major breakout comment, right? And this first time confirmation of a breakout ever
Mhm.
since, well, I would argue March, right? The last time we had this positive breakout to the upside was basically in March, right? And it's getting there right again. So it does make sense to, well, not only expect a little bit of more upsides, since we are really getting some more chart wise technical confirmation, if you will, but it
Mhm.
does make sense to expect this overstretched downfall that we've seen in the stocks turn up a little bit, don't you think?
Yes, I definitely think so because not only the valuation and also the chart, but those tech names has very strong fundamentals as well as growth perspective, especially in this type of the market, like after COVID, the lifestyle change, and then those technology names is going to be the leaders.
True, and there is this well, there is this fun thing, I think, for many people, it may be completely off the bit, completely strange chart to look at. However, I've recently discovered this very interesting, chart that is called RRG, which is called relative
Hmm.
rotation graph, and it's very interesting to observe that, since it kind of like shows you that the markets tend to rotate, and that they tend to rotate kind of like clockwise, right?
Hmm.
And regardless of what's even there, there's like this momentum approach, as in relative strength on one asset against the another. When you kind of like divide the price of one asset against the another, you see some changes going preceding the major market turns, and at the same time the momentum, as in how fast the market accelerates or decelerates. And overall, you're looking at this tendency for the markets to rotate, as in they tend to rotate from one quadrant to another, which would tell you again that right now we are looking at this improving quadrant, which would tell you that there is promising hopes for XLC, for this communication services, for XLY, consumer discretionary, XLK, communicate the technologies, just like you briefly mentioned. And at the same time, there is this declining kind of like tendency right now for all
Hmm.
of the defensive stocks, right? You would have XLU, which is utilities, XLP, which is staples, and you would have the basic materials there, energy decreasing as well. So it does seem that you would have this overall, sector rotation going, right? As in defensive stocks, the ones that had been leading, for the entire year almost, are kind of like
Hmm.
giving it away a little bit, right? Giving the strength away for or in favors of the cyclical stocks, in favors of the communication services, in favor of the technology, right? So it's very interesting to observe that in real time, but it does seem to align with what you just said, right? That there might be some more upside potential. Do you have any specific kind of like stocks that you would observe there?
You mean like individual names?
Yeah, like tickers. Do you have your watch list maybe?
I always look at Microsoft and then all those like Apple, all those like big names. Maybe some people
Hmm.
think those are boring, but those are the names that definitely always lead the market. So those names, especially at this valuation, I think it's definitely good to pick up some.
Got you. Makes sense, especially especially after this major downfall. And just like we briefly mentioned, perhaps I'll try my best to kind of like display this Netflix chart, because we'd had this massive drop on the Netflix basically
Yeah.
stock, right? This year, and it was devastating for so many people. It was literally, kind of like crushing the dreams of
Hmm.
not only the company, I think, to go forward strongly, but finally it does seem to be rebounding a little bit. Let me show you the chart, right?
Yeah.
And we're looking at this Netflix chart, and ever since November came
Wow.
in, right? Ever since November came in, we had this kind of like peak around
Mhm.
$700, per share for Netflix. And this was the peak. This was the very same day that the entire crypto market reversed, right? Bitcoin,
Mhm.
Ethereum, all of these. And we were kind of like having these running gaps, to the downside, which were kind of like pressing so much from the
Yeah.
sellers. The market would just kind of like be like this sinking ship, this leaking ship. And
Mhm.
right now it does seem that it's just found the base, right? We're looking at this local consolidation pattern, which has just broken to the upside, aligning
Mhm.
with this technology stocks next to it. So it does seem that there's at least of what we call a bear market rally, right? Within the larger trend, which is this 200-day moving average, 200-day trend,
Mhm.
which is oriented downwards, telling you that this 200-day history is downwards oriented. So within this large downwards trend, this bear market, we're looking at some potential bear market rally. And uh, is this something that you're going to kind of like, again, get engaged there much more, as in picking, selecting stocks like Netflix aside from Apple, Microsoft? Would you go out of your comfort zone then, specifically for how cheap the stocks are?
In terms of Netflix, it's very interesting names, and then it's a very good, I think, business model. But I think one of the reasons that people lost confidence in this thing is um, like a subscriber decrease and etc. And also, there's a, I think, good reason uh, that this stocks tanked. It's because people kind of lost interest in this stock anymore. So I saw like some major investors came in right before the like a second gap, but they
Mhm.
got out of it. So I think most of the big investors also lost strong interest in this market. So it's coming back up, but I'm not sure about after this. So I wouldn't be like interested in getting involved in this name much.
Gotcha. Gotcha. Makes sense. There's this funny thing where many big funds would basically bail out. Many big banks would kind of like drop out. Many big, firms, not only within the crypto field, would go insolvent, would go literally broke, right?
Mhm.
For betting wrong about the markets, like not adjusting their strategies, or overdoing the strategies, just like you mentioned, for the number of subscribers for Netflix, which tanked significantly, right? And this constant kind of like decrease in the stock prices would even have this positive feedback loop where people would sell it off even faster and even more, right? Just for the sake of getting rid of it. That's this herding effect that we would have between the people. It's very interesting that you mentioned there. Um, and well, to me, this definitely comes up like the Netflix prices this year have definitely been one of the biggest surprise in the market, right?
Definitely.
What about your surprises? Do you have any biggest surprise? What surprised you the most so far in 2022?
So far, like China stocks, Chinese stocks, it seems like very having so much potential, like Neo and those like EV names. But because of the, I think, home country regulation, as well as SEC might delist all those names and so on. So those names are very, very high potential name, but people also at the same time lost interest in this names. So it's, I think it's a fundamental wise or business wise growing, but for other reasons, people lost very a big confidence in this name. So that was very interesting move to me. Yeah.
Got you, got you. And speaking of the sentiment, of course, we've been extremely pessimistic as the market, has been extremely pessimistic about the market outlooks. They would think, the worst and the worst, even over that, would come continuously, and this exactly even just strengthens their beliefs the lower the market goes. Right? There is this the saliency in the market, or what is called a representativeness bias, where people would take the last sample, let's say the last
Mhm.
decrease, and they would extrapolate it directly to the future, right? And just because the market dropped, the pattern unfolded downwards, some pattern, some triangle, whatever in the chart would unfold
Mhm.
downwards. They would take this last sample and they would assume, okay, the last time it solved downwards, so it has to solve downwards again. So they would bet and sell their stocks, right?
Mhm.
Which doesn't make sense, of course, because it's no the past is never guarantee of future success. And to me, definitely this huge deep nosedive on the Netflix prices has come up as one of the biggest strikes, as one of the biggest losers there, definitely. So and it's surprising even more because it's literally this blue chip stock. It's huge. It's right there next,
Mhm.
this FANG stocks next to Facebook, Amazon, Google, and so on. You mentioned the Chinese stocks, which is something that I'm not much familiar with. Uh, do you think we can talk a little bit about that?
Oh yes, of course. I forgot the name. I forgot the ticker, but there's a China stock ETF listed in Nasdaq, and then there's another like leveraged version that was really popular, at least in Japan. And people every day talk about like all those Chinese stock, and then maybe next year or this year even having a better performance than Tesla and stuff. Um, so people think, oh, maybe Tesla is now too big. So what they were looking for was next Tesla, which was supposed to be maybe Neo or Li Auto or
Mhm.
maybe Rivian, but not sure. But the people thought China is next America, next USA, but um, all those stories kind of faded out as the market collapsing. And also Chinese market, people think China market is kind of like always has potential to collapse, but never does. So kind of believe in the strengths of the growth. But now the government is trying to regulate all those um, tech name like a Tencent and Alibaba, and after that, people really don't know what to do with the China stocks. And then now all of a sudden, maybe kind of same as crypto at this moment, they never want to touch it now. But
Yeah,
I believe when they come back, like crypto, they're gonna be all in all those names.
yeah,
So long term wise, yeah.
that's a classic move. Yeah, long
Yeah.
term wise, you said.
Oh no, for like when they come back, it's going to be the same move as crypto and China stock.
Got you, got you. It makes sense, for the people always to see. I think the majority of the people, are always wrong about the extremes. That's what they say, where they would sell the bottom every single time and they would buy the top every single time, right? And
Mhm.
at some elevated levels, elevated numbers. It's always easiest, or I should say, hardest not to sell at the bottom and hardest not to buy at the top because you feel the
Mhm.
most urge, that you feel the most pressure. Everybody talks about how bad or how good the stocks are, or how bad or good
Yeah.
the cryptocurrencies are, right? So it's definitely similar thing. Uh, I think that with so much of your insights already taken, I would definitely be hearing. I would love to hear, as well as the members and of the community, the viewers, the listeners would love to hear. I'm pretty sure about your best trading tip that that you may have for the people here.
The first, especially in this kind of environment, do not try to buy at the dip or the bottom because you never get the bottom, like you just said. This is very important, especially the market is now really volatile, and then also the economy is not good. You may lose your main job, so you never know like what's out there. So first thing we have to do is secure our life or fund first for the next bull run. So be conservative. And also, what I would always do, what I always do is look at the central bank move, Fed move, because they are the essentially the market maker, market mover. So follow their trend, follow what they're trying to do, and then now they're trying to regulate, tighten the market. So don't rush. Something is coming. The market, the economy may slow down further than, I mean, much more than expected. And then when they when they loosen the market, maybe that's the time to go in. Maybe people think want to go a little bit earlier than their move and stuff like that to get the like maximum return, but you never know what the maximum return is or the maximum loss is. So be conservative and also follow the Fed. They're the market maker. Yeah.
Got you. Don't fight the tape is something that I learned to be the most important point. Actually, don't fight the tape. Don't fight the tape. Don't fight the tape.
Yeah.
That's what you just referred to, and I couldn't agree more. And ladies and gentlemen, this has been actually kind of a wrap up, for what we had uh, for you in store today with Joe Takayama. This great name of the Japanese side of the market, of the Japanese side of the word, huge representative and an ally for Asian markets as well, as we've just seen, has been sharing this wealth of knowledge and generosity of time with all of you guys. So I want to kindly thank you, Joe, for coming over to our Nestro podcast. Thank you for
Thank
coming
you.
over and sharing your wealth of knowledge and being here. Thanks so much.
Thank you so much, Adrian. And thank you for listening. I'm very happy to be in this channel. Thank you.
Amazing. Likewise, I'm very happy as well. And here's to better future. Here's to better markets improvement. And I hope to see you soon about on the podcast on some good checkup that we just had some good news out there. Hope that's the future. And I see you guys around. That's all we've got for you today. Take care. Bye bye.